today with me is amazing Allison Byers. And Allison, when I always ask like who I should have on the next podcast, your name came up the most, I think. And I thought, oh my God, this is going to be unbelievably difficult to get her on the podcast. But thank you for being, so driven to talk and like to pass on your experience. So here's with me, Allison Byers, the founder of Scroobious and the leader with more than 15 years of experience. Could you please introduce yourself and tell us what you're working on right now?
Yeah, of course. And I'm really glad to be here. And it was fun to hear from you. I love, giving a voice to those who identify as underrepresented as part of what we do. And I'll get into that. But I like it, your platform and what you're focusing on too. So I appreciated you reaching out. But yeah, hi, everybody. Thanks for tuning in. I'm Allison Byers. I'm the founder and CEO of a company called Scroobious, which I know has a funny name, but there's a story behind it. Find it on our website. And as Anna mentioned, I was a tech operator for 15 plus years, working in mainly data-driven startups and consulting agencies in the Boston area where I am. And then I went into entrepreneurship. And I launched and co-ran a medical device startup that was spun out of MIT and a hospital system, again, here in Boston, where I was kind of the business one on the team, and I led our fundraising efforts. And we raised about 10 million over the course of 5 years for that company before it was acquired. But for me, what really stood out and defined that experience was the gender bias that I encountered. And having been a tech operator for that many years, I thought I had seen all of it, but this was different. And it really did catch me off guard. And I do believe that gender played a role in limiting what we were able to raise at that company. So I did a lot of research into the space of fundraising and pitching, and you very quickly encounter some pretty devastating statistics for anyone who's not familiar. Only 2% of VC dollars go to women, 1.6% go to Black founders. In fact, a report just came out that's even dramatically lower over the last quarter. Less than 1% go to Black female founders and other demographics that have similar statistics. So I felt very compelled to do something meaningful about it. When you have numbers like that, it is systemic. It's a systemic issue, and it's a loss not just for those founders, but for our economy. So what I'm doing with Scroobious now is a little bit two-sided, but we've gone to market on one side, and we've focused on productizing the value that you get from working with a fundraising pitch coach, so that we can do this in a scalable way. So it's an online platform that pairs online education in the form of micro lessons and downloadable templates with specific points of personalized feedback from a trained reviewer. So a person can look at your stuff and give you feedback, and community and events and all of that, really to help teach founders who have been historically blocked from accessing investor networks how investors think, so that they can present as investable and compelling, because it is not intuitive and it is not easy to get good, affordable resources to help you teach that. So I'm going to stop talking there, but that's
but that's amazing. I really love your drive. Like, this is our second conversation, and it's every time it's the same. I just sit there and enjoy you talking. So thank you for that. But it's an interesting journey. Like, you were a founder of this medical tech product, right? And were you a technical founder, or what were your roles there?
Yeah, no, so I joined a team of scientific founders. So this was, it's a little bit different. When we talk about the world of startups, a lot of the time we kind of go right into tech, and it was a digital health product, but there's, we do a lot of work with life science companies or consumer packaged goods or food and beverage, right? There's all different categories. It's so broad when we think of the world of startups. And so with that one, it was technology that had been developed in the clinic for 10 years. It already had a full load of academic and clinical validation and work and data behind it. And the scientific team wanted to get it out into the world, it was in the Alzheimer's diagnostic realm, and it could do a lot more if it was in a commercial entity than if it stayed, behind academia. So I came in as, I've got my MBA, I've done startups as a business person, to incorporate, negotiate with MIT's trade licensing office, to, get our counsel, to create our strategic plan, to hire, right, all the things from the business side that go into translating science out into the commercial world.
Awesome. Okay, thank you for explaining that. And ultimately, you were the one going after the investment, right? So, what was your experience that finally, drove you to opening a business that would ultimately change it, right? So, what were the insufficiencies? Like, what were the problems, basically, that you experienced in your journey?
Yeah, so a lot of them. But, for my origin story for Scroobious, I talk about the importance of founders explaining their origin story a lot. A very common one is that you experience a problem, you research to find a solution, there isn't a good one, and you want to go make one, right? And that's a lot of my origin story too. I went into the world of entrepreneurship with, without having done that before and without knowing what I was up against. And that's the case for a lot of founders, and particularly, underrepresented founders, which can mean a number of things. It can be gender or race. It can also be veteran, non-binary. It can be an invisible disability or neurological difference. You might be neurodiverse. It can mean a lot of things, but you go into this space and you don't always know, right? I did not know the state of funding allocation when I went into it. I did not know the bias I was going to face when I pitched all of these venture funds. And so there's a couple elements. One is that reality of who gets what type of funding and valuing your own time so that you're realistic about it. Right. I took a ton of pitch meetings I never should have, and I didn't know that at the time. And then two is just the inefficiency of the state of pitching and fundraising in general, no matter who you are. I did this pre-COVID. I was flying all over the place all the time, right? I'm on the East Coast. I was flying to the West Coast all the time, and you're just pitching your heart out and getting so many no's, and it's so opaque when you're in the process, whether it's going well or not going well, because investors are not incentivized to give you direct and honest feedback on your pitch for a number of reasons. It's not in their best interest. And that's what I was grappling with when that company was acquired. And I really wanted to understand, was what I went through typical? Like, is this how it really works? I can't believe that's how fundraising works in general, even aside from all of the issues of lack of parity and who gets funding. But that's where you tend to see innovation occur, is when you find someone who's kind of from the outside enters a system and realizes how incredibly inefficient it is and sees a different way that it can work. And that's where I found myself in that period of reflection.
Okay, and there are 2 points that I want to address in your answer. So the first one is when you said, it's not really in investors' best interest to tell you no right away. And now I remember, her, Mariam Nusrat, she was talking to me about her fundraising experience. And she was saying that, maybe sometimes, no is just not now, right? But, and this is something that I have experienced in my tiny little story, but that sometimes it's just a lot of like wiggling around, like not really telling you what's going on. And like, even when you know that you're going to a very wrong investor, like we were in like fitness and health industry, and we were once pitching to an investor who would only invest in like NFT and Web3. And it was like, oh my God, this is such a waste of time, ours and hers. But no one would say a word. And like, why is that? Why is this happening? Is it fear of missing out on both sides, or what is it?
Yeah, and Miriam is great. I talk about her a lot actually as an example of someone who has utilized multiple channels of raising funds. She has done an amazing job of blending all different types of capital sources, with the realistic understanding of what was going to be accessible to her at what time. And so there's a couple factors at play about why you don't get this type of honest feedback. For investors, they have to hold on to, part of it is FOMO, but part of it is also just the reality of running a fund or your goals for investing. That if you pass on a founder and then they do something big and you want to get in on it, you don't want them to have a negative opinion of you. You want to be able to get back in, right? And so there's a risk for the investor. If I give you direct feedback that you don't like, you might cut me out of something that happens in the future. And that's what I mean by incentivized, right? They're not incentivized to be honest with you because it might cut them from later potential participation. Yeah. So founders a lot of times will get like, oh, it's just a little too early, or come back when you have more traction, or, just not quite in our thesis. All of these vague reasons that don't seem to really make sense or seem like, well, we could have talked about that more. And that's the frustration of well, it's not a flat out no. So what does that mean? Should I come back to you? For the founder, it's really confusing. And that's why. And I liken it to, investors basically let founders walk around with food in their teeth and they don't tell them, right? They're letting founders go out and pitch everyone with material that they know isn't investable or they know has some core issues. And they're not telling them because it could hurt their future chance. And that's just not fair. And it's so frustrating. And you need that external source, right? You need someone who is going to give you the feedback that they should be giving you so that you can adjust and present yourself as more compelling and more investable when you are. You just need someone to teach you how to do that.
Yeah. Oh, and my best experience was when we actually went to one investor. We were not even asking for investment. We were just asking for advice. And he just point blank said, guys, you're so bad. I'm not even going to give you an advice. And it was like, okay, well, at least I was honest, we were not, not another hour spent like telling and like getting your heart out. But another question that I wanted to ask you, and because you said I was, flying back and forth, it was a full-time job, a lot of no's out there. So how to stay motivated, because it's an exhausting and like lonely game a lot of the time, because most of the time that there are two co-founders, one is technical, one is not, and the one that is not usually does the talking, right? So how do you keep yourself motivated and focused?
Yeah, it's a great question, and it is so hard. So like first, one is just being informed. And again, that knowing what you're going up against helps you keep your motivation and have the thick skin you need to handle the no's and handle that repeated rejection. We've worked with over 350 founders in basically the past year and a half. And a lot of them don't realize that what they're going through is a normal experience for a lot of other founders, right? They think that they're doing something wrong, and they don't realize that this is happening to everybody. If you're new to that space, or you come from an area that, you don't pitch in a business sense, often a lot of life science founders or academic founders are in that camp. Or new, student entrepreneurs, you're thrown into this pretty hostile environment and you just don't know that it's normal. So knowing that you have a community of others going through your same experience is so important, and the ability to go to them for support and share these stories and support one another. You have to find, we have our own community. There's a lot of, you have one, there's a lot of communities out there where you can find peers that are other founders, right? Those are your peers. It's not inside your company. So that's one. The other piece of advice I give founders a lot is when you're pitching, you're going to do this over and over and over again. If you don't feel a natural passion bubble up when you're telling the story for the 500th time, that's a signal to yourself that you might be losing motivation or something isn't gripping you anymore, right? You should naturally, as you start talking about the problem you're solving and the way you're solving it, want to share that no matter how many times you've said it before. And when you lose that, pay attention to it, because that's a natural motivator, right? You start thinking, yeah, like I do need to fund this. This has to exist. You should feel that every single time. And then just knowing that you're going to get way more no's, and keeping the perspective of being an equal, right? You're walking into the room, not asking for charity. You are presenting an opportunity to profit off of what you're building, right? You're giving someone that chance. You're saying, I'm offering you the chance to join me. I'm going to make you money. And if they pass, well, they're missing out. You have to keep that in your head, right? And know there are millions, literally millions of investors in the United States alone. Forget about internationally. It's a huge world of investors. And you're going to get way more no's than yeses, but you only need that handful of yeses. So if someone says no, not to linger on it, say, okay, not the right fit, moving on. Let's go find the one that's yes.
Oh, cool. I really love how we bring up more and more speakers that talk about it, because I feel like when I talk to founders, they usually address it from the point of asking for money, basically, right? Not giving someone else an opportunity to make even more money out of this awesome idea that you have. But that's great. And so what was your first experience fundraising? What was something that maybe, I don't know, was so horrendous that you didn't want to do it again? What was the worst question that you ever gotten?
Well, we're thinking of bad experiences, so I can share. There was one pitch. It was a very well-known investor. This was at my last company. I've raised an angel round for Scroobious, so this was a different fundraising experience. Yeah. And raising for medical device is different. It's very capital intensive. It needs a lot of money up front because you have to run human clinical trials and there's regulatory risk, right? It was a different kind of raise than a technology platform, which is what I'm doing now. But you had to raise for large amounts of money to be able to fund that. So I was in a very well-known health tech investor's office pitching. First, I really wasn't given the attention I should have because I was the only woman in the room, even though I was the one that knew our subject material and was leading operations and, making decisions and all of that that comes with running a company. But I found myself basically on the defense with every question, and every question was an argument and, trying to convince this very influential man why this was a good thing and why it was working. We had, remember, 10 years of validation and work behind it. This wasn't an idea on a napkin. This was a real thing. And I left that meeting so incredibly frustrated and upset and thinking, why was I being attacked? Why was what we're doing being attacked like this? And, at the time, I didn't have kind of that grounding that I have now to realize, one, I didn't know how to recognize prevention versus promotion questions. And this is some really great research. A woman named Dana Kahn, she did a TED Talk. You should look it up if you don't know about it, whoever's listening to this. It's great. But
yeah, we'll definitely share it.
Yeah, if you're I share it with everyone, particularly investors, because sometimes they don't realize they're asking different types of questions to women versus men, right? So they tend to ask women prevention questions, like what could go wrong, defend yourself. And they tend to ask men promotion questions, what could go right? Well, tell me about all the upside. And it changes how you think about this opportunity from the investor perspective, just that language and that tone. And I didn't realize it was just all prevention questions. Everything was a prevention. And instead of flipping it around, I just was like in a completely defensive position. And, it was a very uncomfortable conversation. And so now I know, having been through that, if I'm defending myself and what I'm doing, I should pass, right? Hey, I don't know that this is the right fit. Instead of going on for an hour arguing with someone, that's not someone you want on your cap table anyway, right? And I didn't know that at the time. Now I do.
Yeah, imagine working with them later. Just, oh.
Exactly.
But yeah, and coming back, I really liked that you said, it wasn't an idea on a napkin. You had 10 years of experience of working, validating, but a lot of startups don't have that. Right. And I was telling Allison about this situation, but I can share it again. Just yesterday, because we work with a lot of partners, and a lot of founders come to us for support. And this founder was really frustrated because he thought in order to do anything, basically show your idea, tell about your idea to anybody ever, you need to have a working product. So like you need to have a working prototype, right? Maybe a platform or an app. And in order to do that, you need to get an investor. So it's like this circle never ending, and it's just a huge problem. And I thought, oh, but there are so many types of prototype that you can present to your audience and to investors. So coming back to you, I know that for Scroobious, the first version of the product was a Google document. How did that happen?
Yeah, and it's, again, depends on the industry, but in particular, if you're building it really doesn't matter. I think founders don't realize the amount of validation and customer research and testing that you can do before you build anything of substance, like that needs time and, time needs resources, needs capital behind it. And that's for investors, when founders get like, oh, I need to see more traction, or it's not, you're just way too early, or you need to have your MVP out there or something. A lot of what's behind that feedback is you haven't reduced the risk enough that this is going to work, right? Investors are always trying to remove risk, that if they give you money, it's going to turn into something. So if you haven't done kind of validation work to remove enough of that risk, you're not going to get the investment you're looking for. And you don't have to have a whole tech platform built out to remove that risk or to get validation. So like you said, with Scroobious, I had this vision for a platform that would enable founders through self-education, right? Just you on your own time, asynchronous access to really good education, paired with specific points of feedback that mostly is delivered asynchronously again, right? So that's how you can keep something scalable. And that with that, we could teach someone how to make an investable deck that they could go use. And we wouldn't have to charge them like a pitch coach would, right? They could have access it and afford it. So first I had to test my theory, right? I've had to made the content, put it in a Google Doc, and said the points at which, okay, now let's have that feedback. And we got someone into Mass Challenge who, I don't know if they would have without going through that with us. And that was just a Google Doc and laying out of a process, right? I can do that. Anyone can do that. So I encourage founders to think about, what is literally the non-technical simplest way you can go about validating or removing risk, right? And for me to get to that Google Doc, it was also months of research and creating our framework that would be behind the content. I interviewed hundreds of investors about what is it that you want to see in a deck so that I could create good content, right? The content I wanted, but I didn't need custom software for that. Now we have custom software, but I went through, right? I did a Google Doc that worked, validated it, got a bunch of interest, wasn't charging anyone for that at the time, right? Then I moved into, okay, I made a series of landing pages. I could do that on my own, right? I'm a non-technical founder.
Yeah.
Right? Proved that, got it to the point of that didn't work anymore. It was breaking. Okay, now I raise some funds to make low code version of our software, right? So you can go through stages of validation using low amounts of money, right? Not very much money before you spend the bigger money. And that's when you go fundraise, right? That's when you say, look, I did all these things. I showed traction and progress with a low code way of doing or no code way of doing it. Now it's time for code, right? If you're a tech company, or now it's time to manufacture because I proved it worked with all these, low buy versions of what I did, right?
Right. Yeah. And absolutely 100% agree with you. I wrote back this huge email just saying like, go here for like the pitch deck inspiration, go here to practice your pitch deck, and all that. And, if someone who's listening, needs that, please reach out. I will forward it to you happily. And you also mentioned that you interviewed hundreds of investors. So what do investors want? Because every time, and even here, it varies, everyone wants kind of a different thing. Someone needs just the right points. Someone needs 30 pages, so like everything you have, everything you worked on, every milestone you reached. And someone doesn't need anything. They say, hey, there is a blank screen and you're the star. So what is it like, how to find your way in this sea of options?
Yeah, it's one of the most frustrating parts of fundraising is there is no one way, right? Or pitching. There's no one framework. There's no authoritative source for how you do this. And yeah, every investor has their own thesis and their own opinions about what they want to see in a pitch and how they want it done, whether it's a fund or whether it's angels, right? I'm an angel investor too. I have my own things that I look for in a pitch. You can't work to please everyone all the time. But you can be informed about giving off the signals that investors are looking for. So that's a lot of what I found in my own customer research was, what really triggers a decision about investing. And there are differences for different capital sources, right? For angels are different, angel groups are different, funds are different, crowdfunding is different, right? You have to always think about who's your audience, who are you trying to compel, and what do they need out of it? But in general, for an early stage pitch, whether it's a fund or whether it's an angel, half the bet is on the person and half the bet is on the idea and the opportunity you're presenting. So with the person, you have to present those signals of confidence and competence, your background, how you hold yourself, that you really are giving off, what you're doing, right? A lot of our last raise was me and my ability to have that force in a room. And so, part of our platform trains on that too, on presentation elements, even simple things like your eye contact, right? I trained myself to look right in my webcam so that I was getting direct eye contact. People don't do it. It's a big difference whether you're looking at a screen or whether you're looking up there. In the receiver's brain, that is interpreted as confidence. And so if you don't do that, you're already putting yourself at a disadvantage. And it's knowing that, right? That's what I learned a lot in my research was, I asked investors, describe characteristics of the founders you like to invest in, right? And a lot of the characteristics you can signal with your behavior and how you present to get to what's perceived as those characteristics. So I learned a lot about that. And that's part of the content we teach is how do you present in that way. And then with the content, what came really through crystal clear was communication, right? Like just understanding what you are doing in a clear way in a pitch deck is what matters. And that's how we can have content that is industry agnostic, because it's not about your business necessarily, but it's how you're communicating the opportunity for investment in a simple way so that anyone can understand it. That's what investors wanted because they have very limited time. They see hundreds of pitches. They spend on average 3 minutes per deck. That's really not very much time. Yeah. They need you to communicate quickly and efficiently with no jargon, the core parts of a deck, right? Which anyone can find on our website in our framework. Why are you doing this? What is the problem? Convince me it's real. How are you solving it? With simple, quick to understand language on slides that are laid out so it's easy for them to read. That's really what I found, and that's what we centered our content around.
Perfect. But let's circle back to your product, right? And it was very tech oriented, right? You probably had to talk about some features, right? So in this kind of product, how to pitch so that you just don't drown in all the features and technical terms, and you still present the business side of it? Or is there another way to go around it, and you should only just in this case, when you're developing this kind of products, go to investors that have experience working with them, so they speak your language and not necessarily need like the business side of it, but they just, their eyes start shining when they hear how many lines of code you've done.
Yeah, no, it's a great question. And that is, half of fundraising is finding the right people to pitch, right? And particularly, we're really focused on early stage for for this conversation. And when you are early stage, a Series A or earlier, yeah, angels are a great source of capital before you go to a fund. And there's some key differences about how a fund operates and their fiduciary responsibility versus, to their sources of money, their limited partners, versus an angel where it's just a person, managing their own money. But for angels, that is what I recommend with how to find the right people and navigate this sea of options, is find the people who are just going to get it. Like you said, whose eyes are going to shine. I love that phrase when you start talking, and it's not an argument, and you don't have to convince someone why this is needed or why you're building in a smart way. Who's just going to get it and be a champion for you. That's who you want early stage on your cap table. And they're going to give you so much more human capital as well, because they get it and they're passionate about it too. Right. So that's absolutely great advice for how to try to find people at that early stage.
Awesome. Okay, but all right, and let's then maybe cover another side of it. Do you think that every founder needs a VC? Or, those bootstrapping like indie makers, and it's such a great community. I absolutely love them. I just, got a glimpse of it over the past couple of months, but I think it's amazing how they support each other. They're so scrappy and like they know how it works. So do you think everyone needs to like go to investor and try to raise their unicorn, or it's just not for everybody, and if you're comfortable with it?
Yeah, absolutely not. My first piece of advice to anyone is, if you don't have to raise from investors, don't do it. The best way to run your company is to not take investment. If you can do that, by all means, do that. Grow off of revenue. That is the best way to fund your company. That is not realistic for a lot of people to be able to build, right? It is for some. And if it's a slower growth than you would get if you had a bunch of money to begin with, that's okay too. If it's sustainable, if you are building and providing value, if you feel fulfilled, and if you can, earn the living you need to have a life where you're not worried financially, keep doing it. There's no one right way to build a company either. That's fine. A lot of these big success stories and huge exits you hear about were 10 plus years in the making. It wasn't 2 years, right? The VC has really been romanticized as the way to build a company. And I think a lot of founders view getting your round as the success metric. but it's not. That should be a vehicle for building a successful company. In and of itself, raising the funds is not the success metric. And it's important to separate those goals because you can get really wrapped up into it, right? And you can see these announcements of huge funding rounds and think, well, why can't I do that? And it's my goal to do that. But your goal should be running your company and building a profitable company. And you might not ever need venture capital. There are tons of very successful founders that just aren't in the popular press who never raised venture and had really big exit events. A lot of them can go right to private equity, which is a totally different thing to talk about, or be strategically acquired, right? And you don't hear about them. So just because VC dominates our popular culture doesn't mean that it's the right thing for every founder. And again, being aware of your realistic odds of getting a check from VC is really important. Statistically, you are not likely to get that if you are a woman or person of color. You just aren't. So knowing, it's not saying people shouldn't go for it, right? But knowing that and having your eyes open to it, and also investigating other capital sources like Miriam did, is really important.
Wonderful. So yeah, I want to talk more about Scroobious and what you do and how you do it. So it says human first fundraising experience. So what does it mean? What is human first in this case?
Yeah, so a lot of decision making in investing is not rational. A lot of it really is about people, right? It's people investing in people. There's also this kind of misconceived notion that like this fund is investing in this company, and it's, it's not. It's a fund manager building a relationship with the founder of a company, and person to person developing that trust and that rapport over time until it seems to make sense to invest. That has a human element. And right now, that human element isn't being captured in a platform type of way, or isn't being thoughtfully used to help connect the right opportunity to the right source of capital in a big way, in a scalable way, right? There's lots of boutique firms or matchmaking or, broker dealers are part of this, ways that are smaller scale to help foster that. But these networks are enormous, right? Like millions of investors, millions of founders. How do you efficiently enable that exchange of opportunity and capital? And for me, I truly believe that figuring out how to capture those human elements so that you have people that will connect with each other, as well as the opportunity that's being presented, is going to be critical in fostering that efficient and also fair and more equitable distribution of money and generation of wealth for the founders who are looking to build that generational wealth. So all of that big fancy talk to say that with Scroobious, the idea on the founder side, right, we incorporate the human in all of it. The way that we build our content, the way that we run our community and our events and our workshops and our learning is focused on talking to people like they are people and giving them respect and doing it with authenticity so that you can actually learn and not just have someone talking at you all the time and where you don't feel like you're keeping up, right? It's inclusive and it's meant to really enable people to learn. And then on the investor side, we haven't launched it yet, but we're building an investor-facing side of this as well, where we have proprietary variables about people's pitch and also about the people to help create a more efficient way to show opportunity to capital that will be more likely to take it seriously and write a check because it speaks to them. So that's what I mean by human first, is really not forgetting that this is a people and relationship-centered industry.
Right. No, thank you for telling us. And I think that's amazing. But it also kind of looks like such a big problem. And definitely, like in my in my head, it's not really scalable, and it's great that you're changing that. So could you tell me how you're scaling it? Like, what's your business model there? So basically how it works.
Yeah, so for founders, it's pretty simple. It's just a SaaS, it's a subscription, an annual subscription that we price crazy, ridiculously low for the value that people get out of it, because our mission is to make this broadly accessible. And we have corporate sponsors of our own too, so we can provide sponsored accounts to founders that might be challenged even by that fee, so that it can be accessible to everybody. So with that, it's scalable because it's accessing online asynchronous education, right? There's only one synchronous event, which is a one-on-one pitch review, but we have other formats of delivering feedback that are written in asynchronous as well. So that scales really easy, right? And we have 3 different subscription tiers. 2 of them don't have that human review element. So it's all scalable. It's you access what you need at the time that you need it. We'll continue to push content and run workshops and offer you community and all this stuff, but take what you need on your own time. So, right, it's not an accelerator model. We actually, a lot of our customers are accelerators, because even that can be not accessible, particularly for parents who can't give that synchronous time commitment. So that education side of it and community building is constantly repeatable, scalable to the largest extent. The human review element of it, we train pitch reviewers who are able to do this in a flexible contract environment. And my goal there is to get as many mothers who've been forced out of their jobs as possible to have access to this type of stimulating, valuable work in a flexible environment. Fully scalable, right? That model has been done many times in other industries. And then on the investor side, that's a bigger project. We have not launched that one yet, and it has a lot of data science behind it. So we're working through those systems now. But if you get, if you measure the right things and you compute it in the right way, you can create scalable value that is personalized, which is what we're all used to today with interest-based networks, right? Or what you see when you log into Netflix. That's a huge scale problem delivered in a very efficient way.
Yeah, that's super cool. I love how it works, and that you're trying to build it from every angle, right? And make it more comfortable experience for all the parties involved. But how did you, I remember you said that you validated your amazing Google Doc first before growing it. So how did you do that, and like where did you find your first users? Right, you said that you were not charging yet, so how did you get your first users, and then how did that grow into paying customers?
Yeah, so you find your first users by starting to build that community or going to where they are, right? So my first users, my personal experience was fundraising as a woman, right? And so there's a lot of ways you can identify as underrepresented, but I'm naturally part of groups and networks and communities that center around women. And I just went there, right? I started with postings on my different networks saying, hey, this is what I'm working on. I'm looking for some people who are actively fundraising or applying to accelerator programs. So you're working on a pitch. Would you be willing to check out what I made and give me feedback, in exchange for having access to this, and, see how it goes. And I got lots of volunteers, right? And work through it. You just go to where the people you want to reach are and offer a fair value of, trade. Right? So, hey, I'm going to give you value with this thing I made, but it's early and I need your feedback. Let's do a value exchange. And that's how I found them, right? Then I broadened it to other networks that are not just part of my natural, because you also don't want to be in a bubble, right? You don't want to only work with people who are likely to love what you're doing. You want to go outside that too. So I collected, this type of experience from lots of different people in different geographies, different demographic networks, different industries, all to validate, again, on that no code way, right? On the Google Doc way. is this content and is my model of content and pointed feedback going to work on a big scale before I go build a software product?
Awesome. All right. And again, I will probably hashtag this like what to do before you build anything. So thank you for sharing. This is an amazing experience, and we're doing pretty much the same. I think we're also going through the community, like just showing what is possible and how. So that's great. And yeah, so far in this trajectory of life of Scroobious, what has been the most challenging?
The most challenge, so I've hit some challenges I wasn't expecting, and it's led to some challenges today. And I'm pretty honest about it. I incorporated Scroobious in January of 2020. So it was 1 month before COVID showed up. And all my work was done right? All that stuff I just talked about all my interviews and making our framework and all of that was before knowing that we were going to be in a pandemic. Yeah. And I had my own fundraising plans, which included, kind of mirroring what I'd done before and raising a substantial amount and going, right to VC. There's a big tech platform vision. And all of a sudden I had to face the reality of schools being closed. I have 2 kids for about 1.5 years. My kids had no school to go to. And that falls on me, right? That falls on mothers primarily. And I had to really evaluate, what to do with this company and with this vision. And I know there's a lot of founders out there that had that same issue to deal with. Do you shut it down? Do you try and do what you can and grow much slower? How do you do this all remotely now? And with these responsibilities, you can't leave your house and quarantining and fears and all of that. And so I had to make the conscious decision to forgo that funding right away. That's not going to be my plan anymore. I'm going to grow much slower than I thought I would. And I decided to focus that first year on building up the brand and my thought leadership and my own presence in this space and build my community as much as I could by authentic communication and content. And it has served really well, right? Exceedingly well for me to have followed that strategy. But it came at the sacrifice of being able to hire and being able to invest in the tech when I might have wanted to. It's a slower path, right? We're now a few years in. And a big challenge that I talk to fund managers a lot about is for founders who were in my situation and had to make this decision, I will not have the traction and the signals that are equal to a single male founder who didn't have to make that sacrifice and didn't have to change course. But now we're both going for funding. How are you evaluating potential when traction is not equally comparable, which is a major signal for investors? So that is a challenge for Scroobious, right? The slow hire, the slower growth, and now going into my own next phase of fundraising, communicating that and helping people be aware of whether they're making a fair comparison of potential based on what's happened over the past few years.
Yeah. Oh, no, I think this morning saw this post on LinkedIn, which said, stop saying we all have the same 24 hours a day. I don't want to swear online, but yeah, definitely not true. I mean, thank God for my husband. He takes a lot of like parenting and then the household chores, but still not the same 24 hours. Absolutely not. So
not at all. I can tell you
not at all.
It's already vastly different from someone without kids.
Yes. And when you're a woman founder, I mean, don't even start there. But awesome that you're sharing that. I really love it. And one more thing that I wanted to ask you is, what would be your best advice for the early stage founders that think that they need more to go to investors or to even show something to the world? Could you share something?
Yeah. So, I mean, I talk to a lot of founders who come our way and are, telling me about where they are and they don't know if fundraising is what they should be doing or not be doing. Should they be working on a pitch? Is that the right time, use of their time or not? Because as a founder, that's one of my other huge challenges, right? You do only have so many hours in the day, and you only have so much stamina as a human that you can put out there. And so you have to decide what is the right use of how I'm spending my time, knowing that it's at the sacrifice of other things that you are putting off. And so for founders that are evaluating, where they are in their business and should they be fundraising, my best advice is first to evaluate, for you as founder and owner of your company, what is success for you? What do you want at the end of this? Do you want to exit in the next 7 to 10 years? Do you want to sell your company or be absorbed by a bigger company and then work there? Do you have visions of an IPO? Do you want a cash exit at some point and then go do the next thing? Or do you want to keep running this for, as long as you're happy running it? All of those are different outcomes, and I would give different advice for whether you should fundraise or not. And that's important to know. As soon as you take an investor's money, they only get money back when you exit. So you're always working toward an exit. And if you're not ready for that yet, or if you don't know if that's what you want, don't go seek investor money right now. Or maybe look at debt vehicles, right? If you need cash, maybe debt is the way to go, a loan, and you pay it back and no one else is owning equity in your company. So you don't have to work toward the exit so that they get it back. If you have recurring revenue-based financing can be a great option. So crowdfunding with perks is another great option, raising from your community, a community round. But there's lots of different creative ways. I would just really evaluate, what do you want at the end, and help that dictate what you would do now. And you might be surprised when you have self-reflection about what you want for the end to be. And then the other piece of advice is I would talk to as many founders as you can who are a year ahead of you, not the big names that you're chasing that you want to be mentors or advisors. Talk to people who have gone through the different options you're evaluating. Talk to someone who's done each of those things, who's just about a year ahead of you, so it's fresh, they just went through it. And really try to learn what that was like and picture yourself in that place. You don't want to jump into something because it seems splashy and like what you should do when it might not be right for you. So that's my best advice.
Awesome. Thank you so much. And again, completely agree. I actually question every website out there that has Airbnb and Apple and something else, the Dropbox pitch decks as a golden standard. And I always think, hey, but maybe, there are amazing creative startups out there that, got successful like 2 years ago, 1 year ago, that, they're fresh and investors want that, not something that was valid 20 years ago. So yeah, thank you for addressing that as well. And yeah, my last question, as always, who do you think we should bring here? What is the person that maybe you want to listen to?
I wish I'd known this before. I would have.
Oh, sorry. I caught you off guard.
I mean, I work with just so many amazing founders. It depends also on who your listeners, or viewers want to hear from, what's most helpful. I always trend toward what is realistically helpful and who is going to give direct guidance and share really honest experiences, right? So I have a number of founders that I work with who, some are in the throes of just getting their company going from idea, like how do you even go about incorporating, right? And then some who are trying to figure out how to get acquired, because there's different ways to do that, who have offers on the table. Or there's some who are facing, they're having to wind down their companies. That's where they were. And I think it's so valuable to hear those real stories from people that are really going through it and will talk about the stuff that isn't often talked about, so that as a listener what to be aware of. right? And what not to be aware of. So my recommendation would be a bunch of names that probably people might not have heard of, but who are going to be fantastic interviewees.
Oh, then, then I'm going to reach out right after. I'm not going to be at your throat right now. But thank you so much. I think you shared some amazing points, and that was really, really educational, and also just pure pleasure on my side. Thank you so much.
Oh, thank you so much for having me. And thanks for everybody who listened or watched. I hope that it was a valuable chat. It was really fun. So I appreciate you asking me on.
Thank you. All right. And I hope to see you again soon. So take care, Allison. Bye.
Bye.